Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 18 Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, thanks for having me back, Jim.
Ted, are we getting a warning of some kind from Canadian midcaps?
Well, on the intro, you talked about the Canadian Insider Index, and that is a midcap-oriented index, which we track, of course, very closely on CanadianInsider.com. And in our newsletter this week, put in a chart. The newsletter title is called Insights on the Edge of Boom and Bust. So we put in a chart of the rolling 6-month performance of the Inc. Canadian Insider Index versus the TSX 60 index. And the TSX 60 is the index of the large caps in Canada. You know, there's the banks in it, some of the, the bigger industrial companies. And what we've seen is that the Inc. Canadian Insider Index, which is the index of smaller names, has been underperforming the 60, which is the larger cap index, now for the longest period since the lead up to the great financial crisis. So this has us concerned a little bit that this underperformance is signaling that investors are shying away from growth stories, and they're becoming more conservative, going to larger cap names that are perceived to be more liquid and safer. Now, the truth of the matter is, if there is a major correction, everything is going to go down, big caps and small caps, but there's still a perception that the larger caps, at least on the way down, cushion the fall a little bit better than the smaller mid-cap stocks. So this is something to keep an eye on, and what we've talked about in our U.S. report is that there is a yield curve signal that seems to work very well, and this was actually this signal was invented by a doctoral student at the University of Chicago. His name is Harvey Campbell, and the signal that we're looking at here is whether the 3-month Jim, his name is Campbell Harvey. I always get it mixed up. But Campbell Harvey's signal is looking at the 3-month Treasury bill versus the 5-year yield. Now, if everyone in the audience has fallen asleep talking about that, this is an important signal because what it has shown that if this gap between the 3-month and the 5-year persists on a negative basis, and that the 3-month is higher than the 5-year for more than 1 quarter, an recession inevitably appears to have followed. Apparently, this signal has never given a false signal. Now, the worrying thing about this rather boring fixed income signal is that it went negative, this gap, the 3-month versus the 5-year, it went negative on March 7th. So we're very close to 3 months. You want to be really optimistic. I think you could wait and say, okay, well, let's see if it goes all the way till June. But, we were seeing a little bit of steepening, steepening meaning the gap closing, because you really, in a normal kind of economic environment, you want to see that 5-year yield higher than the 3-year yield, and, means inflation expectations are good, there's competition for capital, growth expectations are good, so rates are going up on the longer end. Boy, we only had 1 or 2 days of the 5-year kind of making up some ground, and today it has just collapsed again. So it's not looking good on this signal. So, but, keep an eye on that, and keep an eye on the performance of the Canadian Insider Index versus the S&P 60, because those two indicators right now are flashing a warning sign. Now, we have other indicators that, are a little bit more optimistic. We talk about in our U.S. report and in our Canadian report, our insider sentiment indicators. They do suggest right now that early May was a top in the market, but it's not flashing a huge overvaluation signal, but it is consistent with the top. However, we're also seeing some evidence that there may be a floor trying to be built here. We'll have to see. We're not quite there yet. So, maybe stocks are going to stabilize here for a little bit, and then let's just see what happens to this signal, this fixed income signal, which I think is a very important signal of Dr. Harvey, and we'll have to see if it sends the recession warning signal. But one to keep your eye on, Jim. One for your listeners to keep an eye on, because while we hope there's some a nice level of support that's about to be built for stocks here, there's no guarantee that that's happening. And as I mentioned, we have a signal ourselves that suggests that May 1st was a notable top in the markets.
Now, one of the people I've talked to suggests that perhaps this may not be the warning signal that it has been on the past because of all the European money fleeing their negative interest rates and coming to North America where they can still get decent returns. So why not put it into short-term money in North America, whereas in Europe, that's a money loser?
Yeah, absolutely. And I think that's a fair point. One has to be aware of the financial repression that's been going on by central banks, and that price discovery isn't what it used to be. So what that means is, your typical kind of signals that maybe have worked in the past may not work this time. So it's possible, and then investors will just have to decide whether they want to believe it's different this time. But, when you look at what's happening with our Canadian Insider Index versus the 60, so you put the 2 and 2 together, and then, it's a little harder to justify it's different this time, and if you have other signals that are also giving you warning signs, it just makes it riskier and riskier to ignore any signs of a recession. But look, and as I've mentioned before in our conversations, I hope our signals are wrong because it'd be great if the global economy can keep ticking here and stocks can rebound. We would certainly be quite happy with that. But the risks right now I would say are at least balanced, that it could go either way, and that 50-50, whether we're going to be able to continue higher or go lower. But every day we get closer to that yield curve signal, I would get a little bit more concerned that we're stocks are headed for a bit of a correction here, maybe even similar to what we saw around Christmas time. So we'll have to see, but we're not there yet, and let's hope that the dust settles. And we are some interesting signs. We do see, today copper held in there, while the rest, for the most of the day, it was a technology that was leading the market down, not economy-sensitive stocks aside from oil, which took it on the chin. So again, you can say, well, the oil market, it's its own thing. You've got OPEC, and so you can't really rely on what OPEC's saying. So, okay, if OPEC signal, if the oil signal, falling oil prices, if you dismiss that, you dismiss the yield curve, okay, you're dismissing a lot of negative news. Just make sure the conviction level is high, that now's a good buying opportunity. So it is interesting. We're in interesting times, and we're watching it very closely, though. And, we've seen some bouts where the Canadian Insider Index has outperformed the TSX 60. It hasn't been able to sustain that this year. So on balance, we're a bit concerned about the outlook going forward into the summer here. It could be quite an interesting summer. Sometimes in August, you get some big surprises, usually out of Europe, but sometimes out of Washington. And I just the way things are going right now, I would strap on your seatbelts for your summer holiday in the markets here, because it could be quite an adventurous one.
We'll have more with Ted Dixon right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Ted Dixon. Ted, would a settlement in the U.S.-China trade war change things?
Oh, for sure. We would have a big cloud lifted on investment rules and the like. So it would help. Now, whether that's enough, to clear concerns in the market about global growth, we would have to see, and how long it takes, we would just have to see. And the other factor that we're dealing with here is the Fed tightening last year, and that takes time to work through the system. So even if we get a trade deal, there's still something to worry about. There's always something to worry about. And the question would be whether the Fed over-tightened or not. And if you don't get a trade deal, I think the case is much stronger that the Fed over-tightened, because you're going to have a lot of uncertainty. And I know you've had some guests on the show that say, the trade war doesn't really matter. It's not very big in the grand scheme of things. The problem is with investment decisions, and it's very hard to make big, bold investment decisions in a corporation when you're unsure of the environment out there. What's going to happen between China and the U.S. What's the state of the supply chains out there? What are how are your customers feeling? It's very difficult. So, while yes, you can do the math and say, well, this is not a big deal. It's only, few hundred billion in a multi-trillion-dollar economy. What's everyone worried about? Well, what we're worried about is the marginal decision in the boardrooms to make major investments, and that's the worry. So, yes, take that off the table, that worry, and the global economy is in a better shape. The question is it in a good enough shape to survive the Fed rate hikes that were already baked into the cake from last year?
Now, of course, Canadian canola farmers have found out China doesn't want to buy their product anymore for political reasons. Should Canada make efforts to turn that canola into a sustainable biodiesel product?
Not if it involves taxpayers' subsidies. I'd be very concerned about that. That being said, we should be doing some strategic moves with our agriculture sector in light of, Chinese behavior, and not just the agriculture sector, but, I think we have to be mindful of just about every sector. Some are doing, are managing to deal with the China situation on their own. I heard the CEO of Techminco talk about how India was now one of its key export markets, and taking, I don't know if it has usurped China, but certainly they've been looking more towards India. So, it's going to be up to the private sector to go with the flow here a little bit. That being said, I think the Canadian government has been a bit asleep on the switch, or it's been operating under some misguided assumptions about China. But the nice thing about this whole episode with the Huawei is now, the Chinese behavior and the Chinese response is open there for everyone to see. Everyone has their eyes wide open. Personally, I guess China thought that they could smack Canada around because we're just a small player. But I think that's going to probably backfire on them, because China isn't getting a lot of friends out in the world stage. Maybe it doesn't think it needs any, but certainly there was a lot of goodwill towards China in Canada up until this situation. with Huawei, the Huawei CFO, being held in Vancouver on extradition request from the United States. There was a fair amount of goodwill towards expanding relations with China, but that's I think there's now a bipartisan agreement that is go slow with China at the best case, or no go, in the worst case. So. Canada's a small country, so China can afford, I guess, to kind of turn its back on us, and take an aggressive stand. Now they have the U.S. to deal with, and that's a bigger fish for them to try and fry. But they won't be getting any support from Canada. They won't be getting any support from Australia. So I mean, it's been an interesting strategy on their part, but one that I don't think is going to pay off for them and set back the relations between our two countries quite a bit. But the Canadian, they're operating in their own interests. I don't blame them for taking an assertive approach. That's fine. That's their strategy. I can understand their side of the story. With respect to what's happened here with Huawei. So they've set a course of action that they believe is the right one for their interests, but our government has to work in our interests now, and I think there's more information that's available in the public domain for people and the electorate to help guide our decision makers and our politicians accordingly in terms of the approach they should be taking with China and industries that are affected by that. So yes, there will be industries that have been hurt and will be hurt, but then the debate will have to be now: how much do we help these industries? How much of it is a cost of doing business, risk of doing business? And those are all good debates to have, and I think we should have those. And as Canada's got an election coming up. It's a very good opportunity for the public to hear the different approaches towards trade, China, other alternatives to China, other alternatives to the United States. So let's. I'm looking forward to it if we can get there. Jim. But so many times these elections they end up boiling down to stupid issues that really have no consequence in the grand scheme of things, particularly when it comes to emotional hot button issues. Cultural issues, I just hope we don't go there. We had some of that in the last election. We really have big, huge questions that we should be tackling in the election coming up this fall. So let's hope, we get our heads around those and don't sweat the small stuff, right?
Well, it isn't the biggest issue to me is getting Canada. The biggest issue to me is getting Canada's natural resources to markets that want them.
Right. So that's going to be a huge issue, and part of that will be shaped by the government's decision on the Trans Mountain Pipeline, which apparently is going to be in right before everyone leaves for summer, towards the end of June. So I can only guess what the strategy will be there. I cannot imagine that Justin Trudeau wants to start work on the Trans Mountain Pipeline in the lead up to the election. That'd be very, now maybe he wants to have a group of protesters that he can stare down and try and, show that he's really willing to go to the wall for Western Canada's resource market. Somehow I doubt it. I suspect that they will make some sort of a green light decision, but the green light will be actually, well, I guess we're going to go ahead with it, but not just yet. And so, I hope I'm wrong. I hope they get the shovels going on June 22nd or whenever the day after the announcement is, but I'm certainly not holding my breath for that.
Is it possible good news that several Aboriginal groups, especially ones where the pipeline will actually run, say they want to invest in it?
Well, it's good news, except the current government, all it takes is one small interest group to stand up and put their hand up and say, no, we're not in favor of it. And they freeze the project. So you could have 999 indigenous groups and communities and disadvantaged groups saying they're in favor of it. And all it would take is one for this government to back down. So no, I wouldn't take any comfort from that.
We'll have more with Ted Dixon right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're talking to Ted Dixon. Ted, we know the Swiss are famous for their clocks and for their chocolate and cheese. What else are they working on right now?
Well, I came across a story from Forex Live just yesterday that the Swiss Stock Exchange is working on a cryptocurrency that will be backed by the Swiss franc. And I thought, well, this is very interesting because, of course, everyone's watching the euro, and during the next recession in Europe, there will be huge strains on the euro. Now, I've never been in the camp that the euro's doomed, but there are a lot of people that believe that, but there's also a risk that it is doomed. I mean, just because I don't think the euro is going to collapse doesn't mean there isn't a risk around that. There is a huge risk around the euro, and during the next recession, people will want to probably diversify out of euros. So, where will they go? Well, they can go to the U.S. dollar, and some will do that, or they can go to Swiss franc. And what will be interesting is if they get this coin going, this cryptocurrency coin backed by the Swiss franc, it will be the first major currency. We've heard stories about Venezuela and having their own cryptocurrency, but this would be a fairly major currency that has a cryptocurrency component or sister to it. And I think there's a big challenge for the gold industry. The gold industry has had plenty of time to sort of get its head around marrying blockchain and cryptocurrencies with gold. And there is one or a couple of coins out there I know that are gold backed, but they haven't been widely adopted, and they haven't been that I'm aware of embedded into any payment system that can be widely used. So the gold industry, it really needs to wake up here, I think, and I say that as someone, from Vancouver who remembers, the importance of the junior mining sector, in this city for so long, and it is, with the great financial crisis and the like, it's really kind of, pulled back, and it's in a recession mode, but, the industry is not helping itself by not reinventing itself. Every industry, every business has to always think about, Jim, how are we going to do things better? How are we going to capture market share? Well, why should the gold industry be any different? I know there's this thinking that when everything falls apart, people will rush to gold. Well, yes and maybe no. If you have some currencies that are backed by cryptos, it's going to compete with gold. And, I know a lot of gold enthusiasts don't want to hear that, but it's a reality that, that there is more competition coming for gold, and times are changing. And yes, I'm very sympathetic to the historical arguments, what gold provides, and I always think gold will have a place, and I've been on the radio and I've written about, how gold has place in a portfolio, and I own gold mining shares, so, and we follow the junior mining sector a lot on Canadian Insider, but I'm very worried. I'm very worried that the gold industry, they're inward. I know they've had some challenges on the the producers of and rightly so. They're trying to boost shareholder value with mergers and efficiencies, which is all very good. But in the bigger picture, when we had to drop the dropped gold campaign from Grayscale, and the Gold Council came out with its list of reasons why gold is, essentially superior to cryptos. Well, I kind of missed it. We've written a piece in our top 20 gold report this month, basically calling the response a failure, because, if you're going to reach out and attract new investors and make the case that you're relevant, you have to also keep in mind what the alternatives are and how those alternatives are coming down the pike. So yes, sure, there's always going to be a place for gold, but that place is getting smaller and smaller, it seems. And you just look at the recent market volatility since the beginning of May. Who's benefited from that? Well, it's been cryptocurrencies. Now, there could be a number of reasons for that. I don't profess to be, done a study or to figure out why. I mean, part of it may be, a resurgence of getting money out of China. I don't know. But it hasn't been the gold market that's benefited from that. And that in itself should be a bit of a wake-up call here to the industry. So, it is a commodity. Yes, I know. A lot of the major mining companies, they just assume they're price takers, so they're working on getting the costs of their mining down, and I said bravo for that. But, there's a bigger picture that you need to also think about the demand for your product out there. And gold is a financial product in the sense that it competes with the traditional financial sector for people's money. And with the arrival and the revival of these cryptocurrencies, it's got its work cut out for it again as an industry. So let's hope we see over the summer at least some thinking amongst some of the bigger guns in the industry about how they can maybe do something along with Bob Hoy was talking about a couple of weeks on your Friday afternoon show. Coming up with a crypto gold-backed currency, that a sovereign country might sponsor. So, those are the type of thinking that I think has to happen fairly quickly within the gold industry to make sure that gold is seen when the crisis hits as an alternative to some of these other cryptocurrencies that are out there.
Yeah, gold might not be dinosaurs, but they could be woolly mammoths.
There you go. Now, so in our gold report, by the way, we talked about 4 cryptocurrencies where we've seen some insider buying, and you can get. I'm not going to mention those stocks on the air because some of them are quite small. But you can get the report on Canadian Insider. I think it costs $20, where you can join the Canadian Insider Club and get it every month. But we are seeing some encouraging signs in the cryptocurrency space. I wouldn't say it's a stampede at this point, which is good. But certainly I've been a bit surprised in the revival I've seen in that industry in the last couple of months here.
Well, of course, the argument against cryptos is they're created out of nothing and can disappear into nothing. If you have gold, even if the price goes down, you still have some gold. So if you can combine the two, you don't have the disappearing value anymore.
There's a lot of benefits from combining the two, and I don't quite buy the cryptos are created out of nothing. You do have to spend a lot of resources to create a cryptocurrency, particularly in power. So, there is a cost associated. The problem is that it's a trust factor with cryptocurrencies, like anything, like gold as well. There has to be a trust factor. Now, gold benefits by not being anybody's liability. There's no one who if you own a gold bar, it's yours, right? There's no unless you've used it as collateral against something. That's up to you. But you're not. When you buy a share, you're only the residual owner of that company, right? Everybody else is up in front of you. The bondholders, the employees, they get their hands on the pie first. You get what you get. You're left with what's left over. In gold, it's yours. Okay, so cryptocurrencies is a similar argument, except you have to have confidence in that cryptocurrency, and that's their weak spot, right? Like it would be very easy for a cryptocurrency to, especially a new one, to lose that confidence. Now, the longer Bitcoin and Bitcoin Cash and Ethereum are around, then the longer that trust factor will be there. But in any event, there is a good argument to marrying the two, cryptocurrency and gold, because gold has a high degree of you have a high degree of confidence. If you own it, it's yours, right? And you know what you've got. So that's putting the two together makes a lot of sense. So hopefully we will see some innovation along that line. Maybe the World Gold Council is working on it. They don't want to tip their hand, and that would be fine. I could understand that. Hopefully there's something in the works that will that will help the industry catch a second breath here.
Ted, thank you so much for chatting with us.
Well, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of inkresearch.ca. If you have any questions for Ted or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.